All right, let's get right into it. For over a decade now, Lululemon hasn't just been a clothing brand. It's been a full-blown cultural phenomenon, a real Wall Street darling that basically defined the whole premium athletic space. Their growth just seemed unstoppable, but lately, a few cracks have started to show in that perfect picture. So what happens when a high-growth superstar starts to slow down? That's the story we're going to unpack today.
But first, the really important part. Nothing you're about to hear is financial advice. This is all for educational purposes, and all the data we're looking at is pulled directly from Lululemon's own public reports. Okay, let's do this.
Now, this is the quote that got everyone's attention. It's from the CEO himself, Calvin McDonald. See, in the world of corporate earnings calls, a word like disappointed is a massive red flag. It's a clear signal that behind all the big numbers, something isn't going the way it's supposed to. And that's exactly where we're headed next.
To really understand the challenges they're up against today, we first have to get what made them so successful in the first place. What exactly makes Lululemon, well, Lululemon? Because it's about so much more than just the product. It's the whole ecosystem they've built around it.
So let's look at how they define themselves. They call themselves a technical athletic apparel company. That word, technical, is key. They're not just selling fashion, they're selling performance. But the real genius is how they blend that performance with high style, all wrapped up in this made-to-feel philosophy. You're not just buying a pair of leggings, you're buying into the feeling of this aspirational, healthy lifestyle.
And this right here, this is their secret sauce. Lululemon built its empire without Super Bowl ads. They did it with grassroots community. Their store employees aren't salespeople, they're educators. Their brand ambassadors are local fitness leaders you might actually know. And get this, their free membership program has 28 million people in it. This creates this incredibly loyal customer base, a powerful advantage that is just so hard for anyone else to copy.
Okay, so with a brand that strong, how does a company plan to get even bigger? Let's jump into their official roadmap for growth.
They call it the Power of 3x2x strategy. It's a bold name for an even bolder goal, to literally double the company's revenue from where it was in 2021. This is the blueprint they've sold to investors, the promise of sustained, explosive growth. So what are the actual mechanics of this plan? It really breaks down into 3 clear pillars. First, innovate the product line. That means pushing hard into new areas, especially men's clothing and footwear. Second, elevate the guest experience, making sure that shopping online, on the app, or in a physical store all feels like one smooth, easy journey. And third, and this one is maybe the most important, expand the market. That means aggressively planting the Lululemon flag in new countries all over the world. So, that's the plan on paper. Looks good, right? Now for the reality check. The latest quarterly report just came out, and it gives us our first real look at how this strategy is actually playing out in the real world. And this brings us right to the core tension of this whole story. Is the Power of 3 plan firing on all cylinders, or is it starting to sputter in the one place that matters most? This one chart tells you almost everything you need to know. It's literally a tale of 2 different companies. I mean, look at that international growth, a staggering 22%. The strategy is clearly a massive success overseas, but then look at the Americas, their home turf. Growth is basically stalled at just 1%. That's not a slowdown, that's a full stop. Now let's dig into an even more important number, comparable sales. This just measures growth from stores that have been open for at least a year, so it really shows the underlying health of the business. Internationally, fantastic, up 15%. But in the Americas, it's not just flat, it's actually shrinking. Let's just pause on this number for a second. Negative 4%. For a premium brand that commands high prices and has this incredibly loyal following, seeing sales actually go down in your biggest, most profitable market is a major alarm bell. It raises some tough questions. Is there new competition? Are customers just getting tired of the brand? Or is the company itself just making mistakes? So, with such a huge difference in performance, how is the company's leadership explaining what's going on? Let's take a look at their official response. Well, the most immediate consequence of this weakness in the U.S. was that management had to publicly lower their financial forecast for the entire year. That's them basically telling Wall Street that the problems they're seeing aren't just a one-off thing, but a trend they expect to continue. And here are the new numbers. Their revenue growth forecast has been cut way down to a range of just 2 to 4%. Now, for any other retailer, that might be okay. But for a high flyer like Lululemon, that is a dramatic deceleration from the kind of double-digit growth investors have gotten used to.
So, what's the official explanation? Well, they point directly to the U.S. slowdown and admit to issues with product execution. That's corporate speak for, we missed the mark. It could mean the colors were off trend, the styles didn't click, or they just didn't have enough of the hot items in stock. For a brand driven by trends, that's a critical mistake. On top of that, they flagged outside pressures like tariffs, which they think will slice a massive $240 million directly from their profits.
Okay, so we've got the strong brand, we've got the ambitious plan, and now we have this really concerning data from their most important market. This brings us to the final critical question. What does all of this mean for the future of Lululemon?
And this is the fundamental challenge Lululemon is wrestling with right now. They've essentially become two different companies, a high-growth, explosive rocket ship internationally, and a struggling giant in their own backyard. The ultimate question isn't just whether one can mask the problems of the other. It's whether the issues in the Americas are just a temporary stumble, or if they're the first sign of a much bigger problem for this iconic brand.